Good morning to you all, guys. So it's Saturday. No, it's Sunday at exactly 9:35 in the morning. So I hope you are having a good weekend, and you may probably know, as you may read on my thumbnail today, I would like to share with you how I frame my setup using an ICT concept, a fair value gap concept. So we are now on our chart. So I'm using a trading view to analyze the market and to establish our daily bias. So as obviously the price or the market is moving to the downside. So that being said, our bias would be for a short position or sell order. So with this, I'm just gonna go and use the replay tour, so I would be able to show you how I frame. Probably somewhere around okay, since it's today, we're currently November, I'm gonna go for November of last year. There we go. So maybe one is good, and then let me just put this on a full view mode. So ICT concept regarding a fair value gap is basically composed of 5 bullets. So let me just draw a pattern for you. So it goes, hold on, let me just change this. To this one. Okay. So basically we have a high, and then we have this, then we have this. Then we have that new high, then price will go down, price will reverse, and then okay. So here we have let's assume this is the price movement on a particular day. Okay, so to establish our ICT fair value gap concept, we are gonna look for 5 things. So of course I like to establish a proper expectation. So I'm not a master, I'm not like a professional, or what we call the guru, that you see a lot in the internet. So with this is just based on my understanding, and hopefully you can get some value or understanding. So basically, first we have to look for a run of liquidity. So a run of liquidity normally just rests above the old high or previous high. Okay, where this is basically a area where retail trader place their stop loss. So here, looking at our pattern, we can see, or we can conclude that this is our old high. Okay, this is basically where our retail trader put their stop loss, which as a consequence it creates pools of liquidity at this level. So we will call it buy side liquidity. Hold on, there we go. So now we establish our run of liquidity. Now we're gonna look for a swing high or swing low. So basically it's a 3 candle formation where the low or the high, so or where I'm sorry, let me correct that. So it's a three candle formation where the low of the second candle is higher over the first and the third candle. So basically it looks like this. So let's say this is our first candle and this is our second candle, and then this is gonna be our third candle, just right here. Oops. There you go. So as you can see here, our second candle has the lowest low. So that's our swing high. Okay. This is really important because this is what we use when we are evaluating if we have a change in our market structure. So at this area, we'll use this level as our swing high. Okay, this is our swing high. I'm sorry, swing low rather. And then after that, we will look for a displacement. So displacement basically is a powerful move which causes the market structure shift. So as we can establish that this is after the swing high, okay, or swing low rather, we have a powerful move to the downside at this area. So that's our our displacement. Then after, we will look for the fourth bullet, which is break of market structure. So here, this is our break of market structure. Break of our swing high. So we'll put it break of market structure. And then after that, we will finally look for our last bullet, which is our fair value gap. So fair value gap basically it's also a three candle formation. It could be bullish or bearish, so regardless. Usually the second candle is bigger, or probably you could use a more powerful over the first and the third candle. So it looks like this. So this is our first candle, and here would be our third second candle, and then here would be our third candle. Okay, so here this is our second candle. Normally, as we established, normally it's a powerful candle between the first and the third candle. So here we have a powerful candle here. So it is basically ICT concept suggests that at some point, this gap will be rebalanced. So this is basically an area where price has been delivered inefficiently, which create an imbalance or a gap. However, ICT concept suggests that this imbalance, so this is the imbalance, we will put here. So that gap, that imbalance, at some point will be rebalanced by the market. So market will return back. So price gravitates towards the imbalance to rebalance. Okay, so that's basically it. So, all right, so right here we have our price. So since our price or our model is not yet completed, we will just play the button here, and then we'll wait for the market to create its model or our model. So Let's wait for it. Okay, I can see here that we have a run of liquidity already, our number one or first bullet. So we can say, or we can establish that this is our old high. Okay, this is our old high. Now this is our run of liquidity. So price break that high already. No, it's buy side liquidity. So since we have the first bullet established, we will wait for the second bullet, which is our swing high. It's a third or three candle formation, which the second candle has a lower low. So this is gonna be our swing high right here. And then we will wait for a displacement, right? A sudden move of the price, which causes the market structure shift. So let's continue here. There you go. So now we have a sudden move, a strong movement, and lastly, we will look for our break of market structure or break of our swing low. So here we have the break of our swing low. So our swing low was broken by this. That's this one. So finally, we will look for our fair value gap. So as we established, fair value gap is composed of a 3 candle, which normally the second candle has a bigger size in size, okay, or a powerful move as you may use. So with this, we can establish here this gonna be our fair value gap. Okay, why not here, right? Why not here? We have a better look here. You have to go back with our bullets, right? We need this swing high be broken by the displacement. So since this is where our swing high and this is the movement that breaks our swing low, okay, so this will be it could be here, it could be somewhere here, lower down here, but as much as it's beyond or after our swing low was broken, okay, so for me this will be our fair value gap. Okay, so here we have the low of the first candle and the high of the second or the third candle crosses the body of the second candle. It's a powerful move or a bigger in size, right? So now so this is our model, okay. So what we're gonna do is whether to decide if we wanted to participate on this trade, if we believe that based on our methodology that the market will return to this area and then continue moving. Sorry about the background. I opened my window, so fresh air coming in. So we will put here a pending sell order or short order. Normally we can use the high of the first candle as our stop loss, and then you may put your entry level between this, around this area, the gap. But for me, I normally use the high of the third candle as my entry level or entry area. And then, oops, hold on. And then if I don't have like a particular area or a point of interest as my take profit, I would normally just go for 1-to-1 risk reward ratio. So just like that. There we go. So let's see if price will go back to that area. Oops, almost hit our entry. There we go. So as you can see, guys, our entry level was hit, and then just right after it was hit, price moved to the downside, hit our take profit very strong. Price moves strongly, aggressively. So that's how basically we have the run of liquidity, we have our swing low, and then we have our displacement here, break of market structure, and then our fair value gap. So that's the model. So we have a perfect example here. Okay guys, so it's already 5:30 in the afternoon. I'm gonna go ahead and attend the Sunday Mass, and then after we'll go get back with the chart, with our chart, and do some forecasting. Hello guys, so I just got home from the Sunday Mass and kind of feel tired already, but of course we still have to work on our forecast, so we're ready for tomorrow. For the past couple days, I'm actually just wanted to show you this. I've been thinking about what could be a thing that separates us from the person we are today and the person we wanted to be. What could be the gap? And one of the many things, or one of the things that comes to my mind is intention. Do you really intentionally living with regards to your goals in life? Do you really put the work? Do you really make do you really make plans for it? In relation to trading, do you respect your trading plan? Do you forecast your trades, or you just disrespect your trading plan? Do you follow your trading methodology, or do you just jump on the market? Are you being emotional? Do you really believe that at some point you can do it, or you'll eventually do it, figure it out? Those are the points that probably we have to consider. We have to intentionally be doing the things that would propel us to reach our goal, right? Anyway, just a random thought. So I'm just gonna go and have a quick shower, so to freshen up my body. I feel sleepy already, and proceed with my forecasting. So I hope you find value on this video, guys. So I'm gonna see you in the next video, and thank you for staying. So if you could give me a like and hit the subscribe button down there, it's gonna help the channel, and thank you so much for that. So thank you again, and see you on our next video.